Bitcoin has been on a massive tear in the last few months of 2021. In this video, I'll discuss why I think Bitcoin can 10x from its current price and all the catalysts that will drive the price up in the future. I will also explain what is Bitcoin and what makes it so unique from the other cryptocurrencies. So if you're a beginner to Bitcoin or you want to know the future catalysts that will drive up the Bitcoin price, then this video is for you. So as always, I would encourage you to watch the entire video to get a deeper understanding of Bitcoin and why I think a 10x from its current price is not unreasonable. So if that sounds good to you, let's roll the intro. What is going on, my people? It's your boy Brian back with another crypto video to help you build your long-term wealth. If you're new to the channel, my name is Brian and I love to talk about all things investing and personal finance. Like I always say in my videos, if it can make us money, then I'm going to talk about it. Today, we're going to discuss why I think Bitcoin can 10x from its current price and the current and future catalysts that will drive up this price. I'll split this video into different sections and leave timestamps below so you can go back and watch your favorite parts. I'll first talk about what is Bitcoin and the purpose it serves for the future. I won't go into too much details about the mechanics of Bitcoin because I'm sure you most likely clicked on this video to see why the price will increase over time. But I will give a beginner's overview on how Bitcoin works. Then I'll list some catalysts that I think will help Bitcoin's price grow exponentially in the future. Before I start, I need to mention that I'm not a financial advisor and the comments I make today are for entertainment purposes only. Please use the information in this video as a guide only to do your own research. And also, I am invested in Bitcoin, so obviously I'm very bullish on it. So the information I provide today may be biased, which is why it's important to do your own research to draw your own conclusion on if Bitcoin is worth investing in. So with that out of the way, let's begin by answering the most popular question in the last few years. What is Bitcoin? Bitcoin is a decentralized digital currency created in 2009. The identity of the creator is still a mystery to this day and is only referred to as Satoshi Nakamoto. It was the first cryptocurrency created, and therefore any cryptocurrency created after Bitcoin is referred to as altcoins. For example, Ethereum and Cardano are two popular altcoins. The whole idea of Bitcoin and cryptocurrency in general for that matter was to operate on a decentralized network, free from any external authorities. In conventional finance, you have banks who act as the middleman and gatekeepers for money transferring in and out of your account. We need to trust the bank to do the right thing. For those who have trust issues with the government, banks or other authority, may find Bitcoin as a superior alternative due to its decentralized system. There are no physical Bitcoin. The Bitcoin that you buy is just a balance on a public ledger which everyone has access to. The Bitcoin network runs on a protocol known as the blockchain. All Bitcoin transactions are verified by miners, which are basically large amounts of powerful computers, solving complex math equations to validate each transaction. Bitcoin miners are rewarded with block rewards, which are new Bitcoins created every time a new block is verified. Bitcoin mining requires a lot of electrical energy and computing power as each new batch problem gets harder and harder over time. In fact, the blockchain is designed in a way that these math problems get harder to solve every 2 weeks. Also, the mining rewards are halved every 4 years in an event called the halving. The next halving event is due in 2024. I will talk more about this later in the video because it's one of the main catalysts why I think Bitcoin price will increase. The Bitcoin network was deliberately designed to be complex and energy inefficient. This makes Bitcoin's blockchain almost impossible to hack. A fundamental problem with decentralized networks is the risk of a 51% attack, which is one individual or entity gaining 51% of the mining power of the network. If this happened, in theory, the attacker could steal all the funds for themselves. However, with Bitcoin, this is basically impossible because it would require a large amount of powerful mining hardware and electricity. The attacker would be fighting against every computer and energy source in the world that is mining the blocks. There is no way a country, let alone an individual, could have that much resources. This makes Bitcoin the most decentralized of all cryptos to this day. Another unique thing about Bitcoin is there was only 21 million Bitcoins ever created. Once all of these Bitcoins are mined, there will be no longer any new supply. This was done to reduce inflation, and as such, Bitcoin is seen as a deflationary asset. Due to the limited supply, Bitcoin is seen as digital gold. Essentially, as less and less Bitcoin are in supply, the more valuable it becomes. So that is pretty much the basics of how Bitcoin works. Now let's talk about some of the catalysts that will make Bitcoin go to the moon, as they say. I'll first discuss two fundamental catalysts for Bitcoin. The first catalyst is brand recognition. In the crypto world, brand recognition is valued extremely high, and that is why Bitcoin is the face of cryptocurrencies. The fact that Bitcoin was the first ever cryptocurrency created gives it the first mover's advantage, which cannot be replicated. Its brand recognition is comparable to Google or Coca-Cola, where it's the first default name everyone thinks about when you mention the subject. When someone mentions cryptocurrency, you think about Bitcoin first. And in the world of cryptocurrency, that is huge. As previously mentioned, the creator of Bitcoin is still unknown to this day and can only be identified under the alias Satoshi Nakamoto. This is another big selling point for Bitcoin. This makes Bitcoin unique from all the other cryptos because you cannot point a finger at a person and say they created this coin to benefit themselves. It is truly decentralized, and until this day, it is still the most decentralized crypto in the world. Also, it's the first cryptocurrency designed as a deflationary asset where there is a limited supply of the coins, and as time goes on, the supply decreases. Just think of Bitcoin like gold. Our society evolved from the bartering system where people would swap items with each other to deciding that a yellow metal would become the new representation of value. If you think about it, gold is only valuable because we decided it was. If we did not assign value to gold, then gold is quite useless in itself. The same thing could be said of Bitcoin, which is basically digital gold. In terms of technology, there are other crypto coins out there that are better than Bitcoin. However, none of them have been able to surpass Bitcoin due to the sheer brand recognition it has amassed. All these things combined makes it impossible for another crypto to come in and replicate Bitcoin's popularity. The second fundamental catalyst for Bitcoin is the halving or the halvening. I like the term halvening because it sounds more dramatic. I previously mentioned that there will only be 21 million Bitcoins in existence. Not one more and not one less. For this reason, Bitcoin is viewed as digital gold because the supply is finite. So how does Bitcoin manage to keep their supplies low when there are miners mining Bitcoin 24/7? Well, after every 210,000 blocks mined, which equates to roughly every 4 years, the block reward given to Bitcoin miners is cut in half in an event called the halvening. This is Bitcoin's way of using an artificial form of inflation that halves every 4 years until all Bitcoins are released into circulation. If you're curious, the last halvening event is scheduled to take place in the year 2140. At that point, Bitcoin miners will be rewarded with fees paid by the network users for processing their transactions. This will ensure that miners still have the incentive to keep mining and keep the network running and secured. The reason the halvening occurs is traced back to Bitcoin founder Satoshi Nakamoto's view on digital scarcity based on economics, supply and demand theory. Nakamoto believes that by creating scarcity for Bitcoin, its value will increase over time. And so far this theory is going to plan. This way of creating scarcity is the total opposite of how fiat currencies work. In our current fiat system, the federal government controls inflation through fiscal and monetary policies. This is why the Fed can print money at will to stimulate the economy, which in turn will cause inflation to increase down the road. The government can also increase or decrease interest rates at will, which has a direct impact on the value of our money. Fiat currencies like the US dollar are inflationary in the long run. That's just simply the way it was designed. In contrast, Bitcoin is the total opposite, and thanks to Bitcoin halving, it is essentially guaranteed to be deflationary. As of October 2021, there are about 18.85 million Bitcoins already in circulation. This just leaves about 2.15 million Bitcoins left to be mined. When Bitcoin was first created in 2009, the mining reward for each block in the chain was about 50 Bitcoins. After the first halvening event, it reduced to 25, then 12.5. Then in the last halvening event in May 2020, it was only 6.25 Bitcoins per block. To put this into context with the asset Bitcoin is often compared to, imagine if the amount of gold on Earth was halved every 4 years. Since we decided to put a value on gold due to its limited supply, halving gold's supply every 4 years would theoretically increase its price. Now let's look at the historical price movement of Bitcoin after every halvening event since it was created. As you can see, there was a massive spike in price after every event. The next one is scheduled to be in about 3 years time, so that is another big catalyst that will move the price of Bitcoin in the future. 2012, after the first halvening event occurs, Bitcoin's value increased from $12 to $1,207. In 2016, after the second halvening occurred, Bitcoin's value increased from $647 to $19,345. After the third halvening event occurred, Bitcoin's value increased from $8,821 to $63,558. So you can only imagine what the price increase will be in the next halvening event in 2024. Also, fun fact, it is estimated that approximately 3 to 4 million Bitcoins have been lost forever from lost or stranded digital wallets. This reduces the total amount of Bitcoin to about 17 million, which further reduces the supply. Now let's talk about some external catalysts that will drive up the price of Bitcoin in the future. Now I've just realized I've had this light on this side off this whole time, so I'll probably look like a ghost from one side. Oh well, moving on. The most recent catalyst is the approval of the Bitcoin ETF. The United States Security and Exchange Commission, or the SEC for short, recently approved the very first US Bitcoin ETF. The ProShares Bitcoin Futures ETF began trading on the New York Stock Exchange under the ticker symbol BTIO. It was one of the most successful ETF launch ever, taking out over $1 billion in just 2 days. Now, it is important to note that this is just a futures ETF and it tracks the future price of Bitcoin instead of the actual current price. Most crypto enthusiasts were hoping for an actual Bitcoin spot ETF that holds actual Bitcoin, but make no mistake, this is a big moment in Bitcoin's history. The fact that the SEC, who largely ignored ETF providers lobbying for Bitcoin ETFs for over 8 years, finally approved the first ETF is a historical moment. I feel this is a big step in global adoption and the acceptance of Bitcoin and cryptocurrencies. This is the first cryptocurrency-linked ETF that the US Financial Markets Regulator has approved. Institutional investors can now obtain indirect access to cryptocurrency by investing in Bitcoin futures. Now the question is, should you buy this ETF for Bitcoin exposure? The short answer in my opinion for most people is no. This ETF is better suited for the day traders and the short-term traders who like to speculate on the day-to-day price of Bitcoin. It would also allow investors to play with options and use leverage to trade the ETF. Since this ETF only tracks the future prices of Bitcoin, you're buying future contracts of Bitcoin's price and not the price of Bitcoin today. If you want exposure to Bitcoin, you are better off buying it directly and investing in the current spot price. With this ETF, I would not recommend day trading, using options, or getting involved with leverage, especially if you're a beginner. In terms of when an actual Bitcoin spot ETF will be approved, it's still unclear. Gary Gensler, who is the chair of the SEC, has commented that they are more comfortable with a futures ETF structure because futures are traded on a regulated market, whereas spot trading of Bitcoin and cryptocurrency occurs in a variety of largely unregulated exchanges. The main concern is the fear of market price manipulation in the crypto space, which to be fair is a valid concern, and does happen regularly where you see crypto whales dumping a ton of Bitcoin to send the price crashing down only to buy it back at a cheaper price later on. By the way, a crypto whale is a term used in the crypto community to describe a person or entity who holds a large number of coins of a particular cryptocurrency. So at the moment, the SEC feels it's safer for investors to invest in futures ETFs rather than the actual Bitcoin ETF. However, the crypto space is still expecting the SEC to eventually approve a Bitcoin spot ETF. And in my opinion, it's a matter of when and not if the SEC will approve such an ETF. And it could be as early as next year. There is already a proper Bitcoin ETF tracking spot prices on the Canadian Stock Exchange. In fact, Cathie Wood from ARK Invest, who is a Bitcoin bull, is investing in the Bitcoin ETF from the Canadian Stock Exchange for our ARK Invest fund. Brazil is another big country that has approved a few Bitcoin and Ethereum ETFs in the last few months. The United States is one of the most powerful countries in the world, and they won't want to miss out on their slice of the Bitcoin pie in the long term. Again, I feel like it's a matter of when, not if. In fact, I think if they did approve a Bitcoin spot ETF before 2021, I can see Bitcoin hitting 100,000 US dollars quite easily, just from the euphoria. The arrival of a Bitcoin spot ETF would open the market to a wide variety of new investors. Institutional investors would be more comfortable investing in the ETF over the coins because it would be on their own terms in a highly regulated setting. You would see a large influx of money coming in from fund managers and large companies who want regulated exposure to Bitcoin. Not to mention Bitcoin ETF being included as part of a 401k pension fund and other self-managed retirement funds all around the world. This will certainly increase the price of the coin as more money gets invested, but at the same time, supply will decrease. Another catalyst could be more countries adopting Bitcoin as legal tender. In 2021, El Salvador became the first country in the world to adopt Bitcoin as legal tender. The president of El Salvador, Nayib Bukele, explained this will allow their citizens to save approximately 400 million US dollars per year spent on commissions for remittance for transferring money from outside the country. This is because a large amount of their citizens work in other countries like the United States and have to send home money to support their families. However, the money transfer services charge quite an obscene amount in fees, which reduces the amount of money received by their families. The CEO of BitMEX, which is a large cryptocurrency exchange, predicts that Bitcoin could become legal tender in 5 countries by the end of 2022 for the same reasons I just mentioned. So if more countries were to adopt Bitcoin, that is a positive catalyst for Bitcoin price. In addition, Bitcoin brings hope to countries with highly volatile currency prices. One of the most common critiques that I see against Bitcoin is that it doesn't do anything. Well, to that I say, Bitcoin may seem worthless in the eyes of the privileged living in first world countries with currencies that are relatively stable. However, imagine you lived in a third world country where the value of your money can dramatically change day by day. I've read stories of people running into grocery stores and grabbing food from the shelf before the staff start increasing the prices because the currency price just went down. Bitcoin is a source of hope for countries suffering from hyperinflation, which makes their currency useful one day and worthless the next day. It can give the citizens of these countries an equal chance to invest in a global asset that represents a store of value, as well as the expectation to increase in value over time. Not to mention Bitcoin is a hedge against inflation for first world countries which have been printing money left, right and center in the last few years. And that for me is a big catalyst. Another catalyst would be institutional funds around the world allocating a small percentage of their portfolio to Bitcoin. Cathie Wood, the famous founder of ARK Invest, says institutional investors embracing Bitcoin could see it reach $500,000 per coin. ARK Invest bull case for Bitcoin to reach $500,000 is based on Cathie Wood's assumption that institutional investors could allocate 5% of their investment funds to Bitcoin over time to diversify into a new asset class. Cathie Wood commented, "If institutions around the world were to allocate 5% of their portfolios to Bitcoin, that allocation alone, and this is just one of many use cases out there, would add roughly $500,000 to Bitcoin's price." Also, a recent study done by PwC that revealed only 1 in 5 hedge funds in the US were investing in cryptocurrencies. The ones that do invest only invested about 3% of their allocation. This for me indicates a huge potential for future growth in the coming years. The main concern of hedge funds is the regulation of cryptocurrency. So if the Bitcoin spot ETF was approved, then this would suddenly increase the number of institutional investors. It is important to note that ARK's future Bitcoin price assumption didn't even consider the potential for large companies like Tesla, Square, and MicroStrategy to allocate more of their balance sheet holdings to Bitcoin instead of cash. These 3 companies were the most prominent Bitcoin adopters in 2020 and still hold a portion of their balance sheet in Bitcoin. In fact, MicroStrategy, who is led by Michael Saylor, is so bullish in Bitcoin that majority of the company's balance sheet is allocated to Bitcoin. They currently hold 108,992 Bitcoins, which were acquired at 2.2 billion, but is now worth about 5.3 billion. Now, can you imagine if the big tech companies like Apple, Amazon, Google, and Facebook, who have large amounts of cash sitting on their balance sheet, decided to invest a portion of it in Bitcoin? This will create a knock-on effect on the rest of the S&P 500 companies who don't want to be left behind. The potential for big institutional investors and companies buying up Bitcoin is enormous and cannot be understated for the future of Bitcoin's price. Now let's talk about the next catalyst. Some people don't want to invest in Bitcoin because of the environmental impact, which is a fair point because most of the electricity required to mine Bitcoin is created by burning coal, which is a fossil fuel and is not good for the environment. Elon Musk, who was a big advocate of Bitcoin, even raised concerns about the amount of fossil fuel being burned to power Bitcoin mining. In fact, while he still holds Bitcoin in Tesla's balance sheet, he has stopped the payment of Bitcoin to purchase Tesla products due to environmental concerns. The positive news is that he has agreed to join the Bitcoin Mining Council, which includes Michael Saylor, to try to get Bitcoin mining to increase the use of renewable power and make it more green. From his recent Twitter activities, he still believes in Bitcoin and cryptocurrencies in the long term. If we can increase the use of renewable energy to mine Bitcoin, this will incentivize retail, institutional, and corporations who are concerned about ethical investing to consider Bitcoin as an ethical investment in the long term. And on a side note, if Elon Musk announced that Tesla would accept Bitcoin again, that would just surge the price of Bitcoin. The last catalyst I want to talk about is increasing inflation around the world. Did you know that 40% of the entire US money in history was printed in a 12-month span from mid-2020 to mid-2021? Just let that sink in for a while. This still blows my mind. Even if the Fed is trying to control inflation now, in my opinion, all the money printing will eventually catch up to us. Inflation affects interest rate levels. The higher the inflation rate, the more likely interest rates will rise. This happens because lenders like the banks will demand a higher interest rate as compensation for their decrease in purchasing power of money paid back in the future. So if interest rates are higher, less people will be inclined to borrow money and invest in stocks and real estate. This will create a knock-on effect, lowering stock prices with investors withdrawing their money. For this reason, investors will look for alternative investments to store their money. And what better asset to invest in during an inflationary environment than an asset that is deflationary by nature and encourages price appreciation through limited supply? Yep, you guessed it, Bitcoin. So wrapping up, I am very bullish on the future of Bitcoin, and I truly do believe that it can 10x from this current price. I believe the catalyst I mentioned in this video will come into fruition in the next few years for Bitcoin. In my opinion, global Bitcoin mass adoption is inevitable, and I will continue to dollar cost average my portfolio. However, no one can predict the future of Bitcoin, so I'm just speculating here. So if you are interested in investing in Bitcoin, then you need to do your own research and build a strong conviction. Because Bitcoin is still a volatile asset and it could easily drop 50% in value overnight. So please be smart with your money and only invest what you can afford to lose. I hope you enjoyed this video, and if it gave you any value, please give it a like. And be sure to subscribe to my channel and turn on the notification bell so you don't miss any future videos like this. So until next time, my name is Brian, and I hope you make a lot of money.